Welcome back. Markets are lower this morning as the price of oil spikes again. Take a look. The Dow Industrials right now down 200, the S&P down 11, and the Nasdaq lower by 9 points. As oil prices move higher, the price of crude and Brent right now up about 3%. Brent is at 111.59, up 3%, and crude oil is at 105.05, up better than 3%. President Trump's latest operation in the Strait of Hormuz is called Project Freedom. It begins this morning, where the president says the U.S. will work to guide stranded commercial ships through the critical waterway. Around 1,600 ships still stuck on both sides of the strait, keeping pressure on the global energy markets. Meanwhile, OPEC Plus announcing an output increase in the first meeting since the UAE announced its departure from the oil cartel. Joining me now live from the Milken Institute Global Conference in Los Angeles is Calamos Investments President and CEO, John Koudounis. John, it's great to see you this morning. Thanks so much for being with us.
Great
I want to get
see
your
you.
take on the resiliency of this market. We were just looking at the markets in the month of April, and even though we've got a decline this morning and another move up in oil, these markets have been on fire. The Nasdaq up 15% just in the month of April as earnings have exceeded expectations. To what do you attribute this strength, and what are you seeing from clients?
Well, I think the underlying economy is pretty strong. As you just mentioned, earnings are doing really well. And you got tax credits that are starting to kick in. If people file electronically in 21 days, they get their refunds. So the underlying economy is doing well. And if you look at even futures in oil, that's a positive too. People feel optimistic that things will be taken care of in Iran. And when they do, I think you'll see a snapback of oil. And when that happens, we're off to the races again. I think the market really, really wants to run. The underlying economy is strong. The event risk, yes, every day, depending on what's happening, you're going to see the market volatile because of the price of oil. But the fact that OPEC is increasing production this morning, we're hearing UAE now on their own. Well, the reason they're on their own is we think they're going to increase production. It's not a coincidence. The secretary gave them swap lines, and now, you know, they're on their own afterwards. So I think it's a big positive thing for the future of oil prices and for the economy.
Yeah, and the Treasury Secretary joined me yesterday, and Scott Bessent went through some of the backing of this economy, started with the big, beautiful bill, when he said no tax on Social Security, no tax on overtime, no tax on tips, and he said that we really saw that this year during tax day. He also told me to expect economic growth and falling oil prices later in the year. Here's the Secretary with me yesterday. Watch this.
This gives me a lot of optimism that oil prices on the other side of this conflict are going to be much lower than they were going in or at the beginning of the year or at any point in 2020, 2025.
You think oil prices will be lower before the midterm elections?
I think oil prices, we can see in the futures market that oil prices are already lower 3 months, 6 months, 9 months out. But again, Maria, there are hundreds of oil tankers waiting in the Gulf to come out. The U.S. is only blockading Iranian ships, and we will see they're not tolling the strait. We think that they've gotten less than 1.3 million in tolls, which is a pittance on their previous daily oil revenues. And their oil infrastructure is starting to creak. It hasn't been maintained, again, because of our decades-long sanctions against them. They are rapidly filling up storage, and as that happens, they're going to have to start shutting in wells, which we think could be in the next week.
Yeah, I mean, this economic warfare seems to be working. And on the other side of this, you've got a new Federal Reserve chairman coming in. Kevin Warsh should be confirmed by the Senate next week as Jay Powell's term wraps up on May 15th. We're looking for any change in policy direction. What's your view there? Do you think we're going to see a big change in rates and the backdrop in the economy with a new chairman of the Fed?
as long as inflation is going to be controlled, I do think we're going to see a change. I think we're going to have rates being lowered, and I think that's going to continue one of the biggest explosions in this economy that we've seen. I think it's clearly evident that the president's policy of pump, baby, pump was a great hedge for things to come, and that they came, unfortunately, but we were ready for it. And I think we're in a great position where we can handle this crisis, and it's evident by how good the markets are doing. I mean, it's incredible that we're reaching all-time highs, given the uncertainty in the Middle East, but I think that'll play itself out.
Yeah, Ryan Payne is with me this morning. John, Ryan, jump in here. It feels like Kevin Warsh has talked a lot about the Fed's balance sheet, so maybe that's one of the early priorities, to cut down the Fed's balance sheet before cutting rates. What are you expecting?
Yeah, I think I would anticipate that first, because let's face it, you still have some dissent, we were talking about here on the Federal Open Market Committee. But I think what we want to think about is not what's happening right now, but where are we in the fall? And John, you just made a great point. You start looking at those oil futures come September, they're like 13% lower than today. You couple that with the fact that shelter costs have been incrementally coming down. You also look at this just productivity boom, which is very disinflationary. I have to think, I mean, even today, let's face it, the 10-year Treasury at 4.3, 4.4%, that's not telling you there's a lot of inflation in the pipeline. So I think we could see a lot lower inflation come the fall. And I think you could be in a place where the Fed actually does at least cut once this year. I think that's highly likely, and that's probably not priced into most people's models.
What do you think, John?
I think you're dead on. We're going to see that, and we're going to see a change. It's going to be positive. We're very, very positive. The volatility is going to be here, no question. Midterms, we'll see what happens. That's going to be difficult for the existing party, but there's been a lot done already, and I think I still think that the setting going into the midterms and afterwards are going to be very, very positive for the markets.
All right, we will leave it there. John, always a pleasure. Thanks so much.
Thank you, Maria.
All right, John Koudounis from Calamos this morning in L.A. at the Milken Conference. We'll be right back.